1. Explain what is meant by overapplied or underapplied overhead. 2. Why do we have overapplied or underapplied overhead anyway? Overapplied or underapplied overhead refers to the difference between the actual manufacturing overhead costs incurred by a company during a period and the amount of manufacturing overhead the company allocated to its products based on its predetermined overhead rate. If the amount of manufacturing overhead allocated to products exceeds the actual manufacturing overhead costs incurred, the result is overapplied overhead. Conversely, if the manufacturing overhead allocated to products is less than the actual manufacturing overhead costs incurred, the result is underapplied overhead. Overapplied or underapplied overhead can occur for a variety of reasons. One common reason is that the predetermined overhead rate used by the company is based on estimates and assumptions, which may differ from the actual overhead costs incurred during the period. Additionally, changes in the production level or the product mix can affect the amount of manufacturing overhead incurred and allocated. Overapplied or underapplied overhead can have implications for a company's financial statements. For example, if the overhead allocated to products exceeds the actual overhead costs incurred, the cost of goods sold will be understated, and the company's net income will be overstated. Conversely, if the overhead allocated to products is less than the actual overhead costs incurred, the cost of goods sold will be overstated, and the company's net income will be understated. To address overapplied or underapplied overhead, companies may adjust their cost of goods sold or manufacturing overhead accounts to reflect the actual overhead costs incurred during the period. This adjustment is typically made at the end of the period during the closing process.